Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, January 26th, 2008. Well guys, let's talk a little chart action today because it's been another wild day. Right now we have the markets just barely negative, the S&P up about 2 points, the Dow flat on the day, and the NASDAQ is just barely positive as well. Now, it wasn't this way early on, and you can see by your chart that it was another wild day. And in the weekend analysis video update and last week, we talked about the volatility returning to this market, and it has come back with a vengeance, and today is no exception. Look at the gap up here today, guys, and the massive rally. No, number one in this chart I want to point out, folks, is we rallied up to one of the key time frames for possible shorting opportunity. The two time frames are 10 o'clock and 10:30. Look at this move up right into 10:30, guys. The big spike up right here. First of all, that was the dead highs of the day right here at 10:30 in the morning, and look at it right here, positioning it. If I draw a line directly up, it's exactly right here. That was the high of the market. So you have your reversal time in play, number one. So that's your first step right there, folks. So after that, then you're starting to talk about some key levels. Now, this level, I'm going to show you, the highs also match up at 10:30 to a high on the 60-minute chart. I can actually go back and show you here, but there's just not, drawing the line is going to take too long for me to do. But ideally, what you're going to look at, guys, going all the way back here, days and days and days, are key levels all the way back to here. Okay, this is the key right here. The high of the day on the SPY is 85.36. What level is right here? If I were to draw a line directly all the way over, it would come to 85.36 all the way over. So knowing your levels, guys, and this was the opening on the market or really the low of the first candle on the 16th of January, and if you know your levels and you can analyze these charts, you're going to know that the fact of the matter is into 10:30, there's major resistance right here today on January 26th. So number one, you have that area of a shorting opportunity to the downside. Those of you that want to do that can short that very easily. And first of all, the move took us all the way down to the 20 moving average. That would be your first sign to cover your short if you went short there. Alright, and you're just using plain moving averages here. Nothing more than the first hit of the 20 moving average is a shorting opportunity. So from that gap up and rally to 10:30, first shorting opportunity taking you down to the 20 moving average. Next, what you want to do is you want to draw your trend lines in from Friday's action. Take this line, draw it all the way over here. Okay, number one. Now, also, keep in mind, folks, you want to keep your key moving averages all the way over here. First of all, note the high from the candle on Friday. See this high right here that I'm pointing to? It's a little tough to see, I know, because it's a little small. That's actually pretty much the low of where we came into in the initial candle. So you know that's an area as well that you need to watch. And I'm going to take a line and drag it right across there. Now, what do you notice interestingly about the move up now on this bounce? Now, just to choreograph what happened today first, we had Caterpillar and McDonald's coming out this morning. The earnings were not good, but it didn't matter. The market still gapped higher and really rallied until the sell-off came into play here. And look at the sell-off that took place. We actually went negative here, coming all the way down to your 200 moving average in green here, intraday. And notice the bounce. Where does that bounce take us? Where did I just draw that trend line in? Absolutely, right up into that trend line, and now you're meeting resistance on the upside, alright? So that's another key. The other thing I want to point out, after you had this big move up and then the ugly pullback into the 20 moving average, we created an in-spirit of bear flag pattern. How do you see that? Well, notice the 20 moving average. We hugged the 20. Take the low here from the 20 hit and just draw it straight up. You can see this pattern development off of this drop is a bear flag pattern. That's an extremely bearish pattern, guys. Can't talk about how bearish that pattern is. We talked about it in the chat room. It was a breakdown pattern, and sure enough, what happens? The market starts to dump out and dump out hard, taking us all the way through this support line here, all right? Which we did pause at. Notice the lows in the candles here. We did bang on it a few times, but ultimately it was just too much selling to keep us above there, and the market just came right down, right to the 50 moving average, then piercing the 50, taking us all the way down to the 200. The 200's a mega support line. Why is it also a key support line? Not only is it the 200, but what about this low area right over here? Just take this low general area, draw it straight across, and it matches up beautifully. So you have multiple levels, and by the way, guys, this level right here, in the chat room, we bought the FAS which is 3 times long the financials, and we just unloaded it right up into here as well. So that's another play that in the chat room was done. A beautiful play, guys. Can't go wrong. And notice this, guys. Look at this is live action on the SPY here. You are starting to sell off, and I just talked about how we just hit that key resistance line here. Now look at the red candle grow and grow and grow to the downside on this 20 moving average level here off of this, and you key resistance level right up here, which we had just hit. So you're seeing that selling come in, which is a normalcy. That's a normal thing to see after you hit this level to the upside. Now, whether or not we try and break to the upside, if we do, the 20 and the 50 moving average are converging up here in between this line. This will be a significant resistance, and I stress that. Significant should we break above this line, but as of now, we're not breaking above it, and if we retest this 200, this would be support. So this is S1 right here, folks, and R1 right up here. Resistance 1 and support 1. Now let's go to the 60-minute chart, guys. I want to talk a little bit more about this. Couple odds and ends as well that I want to bring into. I just want to show you guys one more interesting thing. All right? If you take this line here and draw it straight up and align everything, where does it go? So you're really connecting the low here and all the way across, and the lows just directly across, and you got this kind of a breakup pattern before today's gap up off of that line as well. Look at exactly how that fits in. And I always talk about symmetry in these charts, and this is a beautiful example how the line that was intact and we carried up pretty much the entire day on Friday comes into beautiful play today with this mirroring the exact line that the 20 moving average is on, as well as the bear flag pattern before breakdown. So you can still see the market kind of gyrating here, and I want to go to the 60-minute now and discuss it. All right, so let's flip over to the 60-minute. Now, also, why would you know, and you guys know I said, right here I said we bought the FAS right on the 200 or right above the 200, and you have a major support line here matching up to here. Now look at the 60-minute. How key is this, guys? How absolutely key is this in the market that on this sell-off, look at where we just pierced on the lows. You pierced the 50 moving average, which is coming right down here, and the 20 in yellow on the 60-minute. So not only did you have a solid support line on the 10-minute chart, but you also had a key support line or double support line on the 60-minute chart, and that's a buying opportunity, guys, for a little bit of a bounce or a scalp. Now, again, this can be applied to all time frames. I talk about scalps, but if it's a daily chart, then you look for a swing, a quick overnight swing position if you hit that. If you came down into this, and this was the daily chart, you'd be looking for a swing tomorrow and the next day for a bounce, or intraday, obviously. If you pierce it, you might get back above, but that would be your buying opportunity on the daily, the weekly, the monthly. Doesn't matter what time frame you use. These technicals and understanding price, time, and pattern will hold true in any time frame, folks, and it is the gold mine. I promise you that. It is the gold mine. So in any case, the other things I want to show you guys, number one, look at this. So we had the gap up today off of this pattern yesterday, and I talked about this in the weekend video too, guys. You guys are right with me on this. I said, note the area here. Note this pattern. This is a bullish pattern, and I also said note the triple bottom. This is all from the weekend video and last week's video. I said also note the triple top right here. Okay, and what happens today? We break out above it, and you would get nice gains. And we had said on Friday also on a gap down, which we did get, we'd be a buyer of this market. And I said on the highs here, I unloaded some of it, and I'd keep some. And we unloaded a little more on the upside up here, so that's fine too. I still am holding a little bit as we're seeing a pullback here, and we'll look for another move up possibly later this week. There's a lot of wild cards this week. You have the Federal Reserve FOMC policy statement. You have whether or not Geithner will be sworn in or get past his kind of, committee and will he get voted to the position. You have lots of earnings this week, and there's just a ton of information coming out this week, as well as lots of economic news. You have GDP coming later this week, so it's going to be another volatile week. There's no doubt on it, but this pattern here, from this pattern up, is a little on the steep side. I'll be honest. It's a little on the steep side on the pullback. What you need to see on this 60-minute chart is to get a little bid back up here so it stops the steepness of it and it can kind of, mellow itself out like this a little over the next few candles. So there's a lot of things to watch here, guys, as we look towards the price pattern and timing of this market. Now, just a note, guys, notice the highs today. I talked about that. Draw your line right across. Where does it come into? Absolutely. Look at this area, the gap down and the sell-off right here. this area, and that's how you knew this market would be at major resistance. I drew this line in on Friday, Thursday, going back pretty much every day last week, where if we broke out above this 50 moving average, that would be the next spot of resistance, and that's exactly where you've gotten to, folks, okay? And after that, I said this one would be the next one, so if we ever break out, that would be the next one to look for, okay? But this one was called last week to a T, and again, have a wonderful day, guys. Join the Research Center and the webinar. Take care.